Hey guys, I'm Sarah. Hope you guys are having a great day. Before I start, help me out by hitting the like button and subscribe. It will help me out a lot. Let's get right into it. Today I'm going to share with you guys why billionaire Ray Dalio believes saving cash is the worst thing you could do. For those of you who don't know much about Ray Dalio, I will tell you a bit about him. Ray Dalio is an American billionaire investor, hedge fund manager, and philanthropist. Dalio is the founder of investment firm Bridgewater Associates, which is the world's largest hedge fund. The firm had $160 billion in assets under management as of October 2017. Dalio grew up in a middle-class Long Island neighborhood and started his investing career at age 12. He invested $300 into Northeast Airlines and tripled his investment after the airline merged with another company. The money he used to invest in the stock market was money he had earned as a golf caddy near his Long Island home.
A caddy carries a golf player's bag and clubs, gives advice on how to play, and most importantly, provides moral support. Whatever a golfer needs, a good caddy is there.
Later on, Dalio received a bachelor's degree in finance from Long Island University and an MBA from Harvard Business School. In 1975, shortly after earning an MBA from Harvard Business School, he launched Bridgewater from his apartment in New York City. And now, with the stock market going through the worst month in 7 years during October and heightened global trade tensions and political uncertainty, it may seem like putting money into your savings account might be the best idea, but it's not, according to Ray Dalio. According to an article by CNBC, Ray Dalio believes saving cash is a bad idea. He cautioned investors during a recent interview that they should never sit on cash.
The worst asset class you can have is cash. Okay, and as long as and throughout history, the only time that cash hasn't been been the better investment than a diversified portfolio of other assets has been during terrible economic conditions that result in reversals like 2008.
Dalio told CNBC's Make It, that's the worst thing you could do because it is the surest tax on your money. You will bleed slowly to death because the after-tax returns are lower than inflation by a little per year. What Ray Dalio means is that over time, inflation causes the goods and services you buy every day to become more expensive relative to the value of the dollars in your savings account. For example, it would take saving over $1,498 in October 2018 to match the buying power of $1,000 in January 2000, according to the Bureau of Labor Statistics inflation calculator. As time goes on, inflation actually becomes increasingly powerful and it eats into your money's buying power.
Arrogant beast. How did you raise your power this much so quickly?
It would take about $10,761 in October 2018 to match the buying power of $1,000 in 1950, according to the inflation calculator. Although you do earn interest on money deposited in a savings account at a bank, the amount is far too low to keep up with the negative impact of inflation, according to Ray Dalio. When you put your money in cash or short-term deposit, look at the interest rates you're getting in relationship to the inflation rate. You will see that your after-tax return will be below the inflation rate. That means that you're experiencing a tax on that equal to that money equal to that difference. So you can't keep your money in cash. If you think that's safe, you're looking at it wrong. It's a sure losing strategy, Ray Dalio explains. According to Bankrate, the national average interest rate for a savings account is only 0.09%. Meanwhile, the current inflation rate for the United States is 2.5% for the 12 months ended October 2018, as published on November 14, 2018 by the U.S. Labor Department.
What you know is that asset class as a whole, over a period of time, are going to outperform cash. Okay, that's the most thing that you could be most comfortable with. If they don't, you have a depression. The only times that hasn't happened.
Since having money in your savings account only gets devalued by inflation, the best thing you can do is invest it. This way, your money will be growing as you sleep.
What'd you do that for?
You can also achieve a greater return than the inflation rate. Over a longer period of time, equities will have a higher return, bonds will have a higher return, and real estate will have a higher return than cash, Ray Dalio explains. Though the stock market fluctuates day to day, it always has gone up in the long run. The average annualized total return for the S&P 500 index over the past 90 years is 9.8%. Furthermore, Ray Dalio says, it is better to invest in productivity than to not invest in productivity, because otherwise your money will lose buying power. Saving money is very important for when there is a rainy day, don't get me wrong, but even more important than just saving money is investing money to grow your wealth and beat inflation. Anyways, that's the end of the video. Thanks for watching. I will be doing more videos like this. Hit the like button and subscribe. Share in the comments what you think about saving money. Also remember, this channel is for information, education, and entertainment purposes only. We are not financial advisors, and all investments involve some degree of risk. Please invest responsibly and do your own due diligence. See you guys. Bye.